Let's take the conversation ahead and actually get some more technical inputs on this. Mitessh Thakkar as well as Sudarshan Sukhani are with us. Good morning, gentlemen. Well, we hope you're well rested and ready for today after yesterday's roller coaster. So, Sudarshan, let's talk about this. I mean, levels were broken. Nothing was sacrosanct yesterday. How do you approach the market this morning?
Yeah, good morning. See, the approach is the same as yesterday when I said that volatility is too high to justify trading. The only way traders can look into enter this market is by following some intraday rules, intraday charts, not just rules, and then going with the very short-term trend and then exiting quickly. This is easier said than done. It's not so easy, not as easy as it sounds. The same view applies today. Volatility has not come down. There are so many measures, but one simple measure is look at the VIX and how it has jumped up. So traders should stay quiet till volatility comes down. You don't make money when markets are going up and down randomly. So be patient. If at all you want to trade, and that's big if, then you again have to track intraday charts and go with the small, very small time frame trend. But ideally, most traders should step away.
I mean, markets are, as I said earlier, it's very interesting to comment on and extremely rich, but could be unprofitable if you're trading in the near term. So wait and watch. Mitessh is with us as well. Mitessh, hi, morning. How are you looking at things? Yesterday, of course, I mean, there was a bounce which got sold into and how, and then from the lows there was a bit of a recovery as well. So how are we poised?
Good morning, Prashant. Yesterday we were, very clearly aggressively on the sell side with the bounce immediately getting sold into. And we also towards the end of the session were suggesting that take part profits off. Now, if you look at the decline which happened in the month of September, October of 22, we got a weekly closing low around 17,094. So 17,100 was some kind of a pivot for us, round number, and a weekly low earlier, weekly closing low earlier over there. So we covered a good part of our short positions. But the structure is weak. So idea is that while at this level, it may not be very favorable risk or equation to enter into a short, the idea is that rally should be used to get into short positions, and trading should be more on the sell side with stock specific ideas as well. So on the index per se, I think anything closer to about 17,400 odd levels would be excellent entry opportunity for taking fresh short positions. So even if you don't want to go full into, you want to take the full short position in one go, then I think take part position at 17,400, take part at about 17,450, and keep 17,520, 25 as your stop loss level. I think these lows, will be revisited. There is a chance of us breaking below that also, but we'll take that forward once we do that. But idea right now is to use any bounce back in the markets to short into it. Not a 40-50 point bounce back, but a one-day kind of rally which would see us about 200 points higher from here.
Okay. So since you said it's going to be a pretty stock-specific market, let's do one thing. Let's take a quick commercial break, but don't go anywhere. When we come back, we'll talk about those very stocks that you need to trade. This morning, we will also have Apurva Prasad of HDFC Securities to talk about the impact on the technology space post the collapse of Silicon Valley Bank and an overall outlook on the IT sector. That's coming up in just a bit.